Morning guys, you are joining us on our morning walk, myself and Ringo here. Now today I want to do a video talking about the health of the student market in Leeds, because this week I was asked exactly my thoughts on that question by two different landlords. And when I get asked that question by multiple people, I start to think there might actually be some value in the answer that I give. So that's what this video is about. Now, for those that don't know, my name's David. I own Central Properties in Leeds. Now, for the past 15 years, we've pretty much exclusively been dealing with the student and professional HMO market. So I feel quite well positioned to give my opinions and thoughts on what's happening and where it might be going in future years. Now, one of the biggest concerns from these particular landlords, which is understandable, is the growth of the purpose-built student accommodation market in Leeds. Now, quite rightly, viable concerns, because if you go into Leeds city centre, whichever way you come in from, you'll see that there's a lot of high-rise buildings there now, and almost exclusively these high-rise buildings are student accommodation. So over the past 10 years, there's been thousands of new bed spaces put in to attract the students, and they've even got plans for thousands more. I mean, thankfully it is slowing down a little bit, but if you're a student landlord that has HMOs that have traditionally always been rented to students, you've got some legitimate concerns there. What's going to happen to your tenant market over the coming years? But I think to accurately answer that, we need to talk about what these blocks are, who they market to, and the effect that they're having on the overall market supply. So generally speaking, there's two types of PBSA. You've got the stuff that people moving to a city on the first years, they will rent there for their first year. They'll make friends, and then when they go into years 2 and 3, they'll look to move outside of those type of blocks, go into landlords' properties, that sort of thing. And then you have private developers who come in, make very nice, studio and one-bedroom flats, and these are kind of funded by private equity, pension funds, insurance companies, that sort of thing. And their tenant market is almost exclusively aiming for high-end international students, because essentially the rents they charge there are astronomical. I mean, for a one-bedroom flat, you could be looking cheapest round about £190 a week, and they go right up to sort of 300 plus. So really they are aiming for a different segment of the market than most of the UK landlords whose tenants tend to be the domestic students, right? So your traditional kind of UK uni pathway, get your A levels done, move to uni. Now, obviously, if you see the amount of blocks that's gone up, you think, well, surely there is a finite supply of these wealthy international students that are coming into the city. And you'd be right, because it's been reported that recently some of these universities, Leeds University, some of the big red brick universities across the country, are reporting a drop in international student numbers. So what's going to happen to these PBSA blocks if they can't fill with wealthy internationals? Could this actually creep into the domestic HMO market to go after the standard UK undergraduate student? Again, which is a very legitimate and valid concern to have. But there are a couple of reasons why I personally don't think that's going to happen. I mean, inevitably there will be some fallout from this. I mean, there already has been, right? So prior to the PBSA sector coming into Leeds, there was literally nowhere else for domestic or international students to live other than your private standard off-street HMO. And now they obviously have a choice between that and your purpose-built student accommodation block. But generally speaking, UK students don't want this, and there's a couple of reasons why. Number one, affordability. Students are being pushed to the max with what they can afford for rent at the moment. Tuition fees are super high. Inflation's obviously kicked everybody's asses when it comes to utility bills and rents and everything like that. They just can't afford any more. And these blocks are completely out of reach to many of them. And the way that these blocks have been designed and developed and the services that they offer, number one, they're buying in city centre locations. So they're paying a pretty penny for the site. Then, of course, there's the construction costs, which cost an absolute fortune. Then you've got the cost of operating these blocks, many of which provide, a lot of facilities, 24-hour concierge, on-site gyms, all bills included. For that reason, it's very difficult for them to come down to the level of rent that the private landlord is offering. And let's not forget that, if you come to university, it's culturally built in that you're going to go rent in a student house. Now, there are obviously some impacts that we've seen in the off-street HMO market because of the introduction of the PBSA. And a lot of that is an improvement in standards, which is certainly not a bad thing. Student expectations have become a lot higher now than they were 10 years ago. And I honestly think if this was going to have such a bigger impact as people thought it would, we would have already started to see it in the HMO market. And right now we haven't. I mean, we're almost fully rented. I know a lot of other landlords and agencies are fully rented as well. So the demand is very much still there for students who, want to live with their friends in a group. But the main reason is affordability. Now, one concern that I do have, which I don't think will ever come to play, but one thing that I think could change that dynamic would be if undergraduate degrees, dropped from 3 years to 2 years, because at that point, I think it becomes more of a hassle for students to switch their accommodation. If they're only there for 2 years, it'd be easier for them to just stay in a block. I know there was talk about this probably 3 or 4 years ago. Nothing's happened with it. End of the day, universities run as big business and they get a lot of money from 3-year undergraduate degrees, so I don't think that's going to change. But I mean, outside of the PBSA market, how are things happening overall in the student rental market? Certainly for the HMO stuff. I mean, we've had a very good season. Vast majority of our stock was rented before the new year. And I think if you are a student landlord, that's what you really have got to aim for if you have a 5+ bedroom house. If you don't have it rented by the new year, by Christmas, then I think you're gonna struggle. There's going to be a few sweaty nights, a few sleepless nights you may have if you're worried about void periods. If it hasn't rented by Christmas, you need to be looking at that price, looking at why it's rented, why it hasn't rented, looking at the affordability, making some price adjustments, going in, asking your agent how many viewings they've done, what's the condition, what the tenants living like in there. The student market kicks in for renting about October, November, and into sort of mid-December. You've got 2.5 months to get rid of it at top dollar for the best tenants. If you start waiting until after Christmas, you're going to have to be more open to negotiation. You're going to get a lesser caliber of tenants, more unorganized ones perhaps, some that might not treat the house with the greatest of respect. Now, the properties that we struggled to rent this year, we could foresee coming. They're ones that needed work spending on them. They're ones that kitchens needed to be upgraded, bathrooms did too. Painting was looking a bit shabby around the edges. We could foresee that happening, and that's the ones that we had to, be a little bit more open to negotiation with student groups, offer half summer rent, later move in so we could get in there and do the work in July and August. The fact is you just can't get away with bog average stock now, whether your student house is in Hyde Park, Headingley, Woodhouse, wherever it is. The tenant expectations are high, they're paying a lot of rent, they've got affordability concerns, legitimate affordability concerns, so if they're paying top dollar, they want a nice place to live. Now, we've also struggled with some of the larger bedroom houses, 7 beds plus. In previous years, these would usually be some of the first properties to go, but I think we're seeing a general trend that students want to live with fewer people for whatever reason that might be. I think if you have a 7 or 8 bed, you really need to be price sensitive if you're not willing to carry out works from the start of the letting season. And I think maybe it's look at time for reconfiguring it. What does the building footprint allow you to do? Maybe not yet, but certainly something to consider over the next 5 years. Can you split them down into individual units? I mean, 1 and 2 bedrooms, there's a shortage of those. They rent very well. So if it's in a prime student area and you can create some nice flats and apartments out of it, a small freehold block, and that'll sell very well onto another investor and rent very well in terms of the students. Now, we also found that 3 and 4 bedroom houses and flats rented very well this year. Most of them were gone before Christmas. Usually it's the bigger stuff that rents before Christmas, and then they will take a little bit longer, but we had a lot of them go before the new year this year. And right now, where we're trying to fill up some of the larger houses with individual room shares, stuff that didn't rent to the groups before July, it's tough out there. It's a tough market. If you have an average quality property, you are going to struggle. I mean, I was on Spare Room yesterday. There's 244 adverts on Headingley alone, each with multiple rooms. So as I say, if you are going to be renting the rooms individually, you cannot be afraid to spend money. I mean, we've renovated a couple this summer. We've spent a lot on them and they flew out, but you really have a lot of competitions. Students have a lot of choice. Students and professionals, for that matter now, have a lot of choice in individual room shares. So if you want to get them filled this side of Christmas, then you need to be getting those properties looking tip top. So what does all this mean if you are looking to buy HMOs for the student market here in Leeds, or you already own HMOs? I think it's a mixed bag. I think the The negatives is obviously that, you know, there is competition out there, but the positives is that, look, if you are a proactive landlord, if you're a professional landlord, if you make sure the properties are done up to a really high spec, you will never struggle to rent these. Always good to have a plan B. So I think if you are looking to buy, aiming for the student market, make sure it's an area that rents well professionally as well. You know, and if you're looking for exit strategies further down the line, then buy somewhere that would be easily converted back to family accommodation, and you could sell on to a family or to an investor. I wouldn't put all your eggs in one basket. And I've said this for years, this isn't a new thing. I think that's wise in any investment. But yeah, overall, very positive. As I say, we're almost fully let. Demand is still high. It's just a case of rolling with the times, you know, making sure that your accommodation lives up to students' expectations. If that happens, then you won't struggle. Yields are still healthy, between sort of 7.5 to 8.5, you know, gross yields at the moment. And I do think there's going to be some deals coming on the market probably in the next 12 to 18 months. You know, I think with the new change in new government as well, I think this might be the last straw for many of the landlords who are starting to age out, getting a little bit long in the tooth, don't want to spend 20, 30, 50,000 in a renovation. And I think for that reason, there's going to be some really good value add opportunities for investors who have the appetite, the risk appetite and the capital to come in and create those, you know, those really good, solid HMO accommodations. You know, if you spend the money to create a quality product, as I've said a couple of times now, you're not going to struggle. So yeah, overall, I mean, we're fully rented. I know a lot of the other agencies are as well. It's just a matter of keeping up to expectations. You know, tenants are paying a lot of rent in 2024, and for that, they don't want to live in your traditional, you know, average quality stock student house. You know, spend the money, be professional, and you won't have any issues. If you've made it to the end of this video and you like what you heard, you think that I provided you some value, and you're thinking about investing in Leeds, or looking to sell, buy, whatever it might be, and you want to chat about the market overall, as I say, we deal with sales, HMO sales, lettings management, consultancy. We even offer a buyer representation service for those looking at, you know, might not be local, but want to get some access to some of the best deals that we have. Then yeah, reach out to me directly. Thanks for watching. Don't forget to like, subscribe, and I'll see you in the next video.